Hello and welcome to Livewire Markets C-Suite reporting season coverage. My name is Anna Dadich. Today I'm speaking to Alf Ianniello, CEO of Codan, to discuss today's results. Alf, it's good to talk to you. What were the key numbers investors should focus on in the latest results?
I think the key numbers, obviously, the growth rates as a group, at 30%, the exceptional operating leverage in EBIT and NPAT at around, mid-60s. But if you break down in the comms and the Minelab areas, just that consistency of growth over a period of time. And I think our cash performance going from a debt level to a positive level, probably $100 million over 12 months has been significant as well. So, it's a consistent Codan story: revenue growth, operating leverage, and cash generation.
Codan is leveraged to two high-flying sectors, gold and defence. Now, defence went from 38% to 58% of communications revenue in a single year. You also doubled revenue in unmanned systems, which now makes up 42% of communications. How much of this growth is tied to active conflicts? And if ceasefires were announced tomorrow, how durable would growth be for next year?
That's a really good question, and we get that asked quite a lot. So in the non-conflict and the conflict zones, we doubled in each of those areas. It was 100% gain in markets. So from a non-conflict and conflict zones, in the areas of conflict, there's structural changes in respect to the way warfare is undertaken in that unmanned space. So you would assume if you haven't got the tailwind of an event, you will get a drop-off of demand. But secondly to that, we are seeing an increased rate of unmanned systems globally. So it's not binary, it's not 0 or 1. I think you will see a softening. But in some of those conflict zones, they're the largest producer of drones globally. So we would expect those markets will become export markets out of the conflict area.
Everyone assumes higher gold prices drive Detector demand, but are you able to quantify that relationship for us? And do you ever glance at the gold price on a big green day like last night and quietly smile a little?
No. For so long, we never correlated the two, and we still don't have any sort of mathematical model that correlates it. Obviously, it's a significant tailwind, and it has assisted. But the other significant tailwind for us is that we actually have developed two great gold detectors that are going into market. So we've seen some great uptake of those products, far in excess of our initial assumptions from a launch. So there is a halo effect from gold pricing. It's just not all that. It's also the products we have in market. And secondly, the market share we have. We're quite dominant in gold detection.
Minelab margin jumped from 39% to 45%. Can you give me a bit more colour on the drivers?
Yeah, the key driver there would be product mix. When you're selling gold detectors compared to a recreational detector, there is an uptick in margin. So it's predominantly product mix and volume as well.
You've flagged global electronics supply chain constraints as a potential headwind for the first half. We've all felt it through recent price hikes for things like iPhones. What kind of bottlenecks are you seeing?
Yeah, I think when we made that statement more to reflect the fact that I think currently we're not seeing it. But when you have the order momentum we have, and we've overshot forecasts significantly, your supply chain gets to a point where the inputs you put in 12 to 18 months ago aren't relevant. So there could be a potential lag to catch up. We're just saying if the momentum continues, that could happen because nobody can predict. So we're not seeing it probably in H1, and we're reviewing any issues in H2 at the moment. So we've just flagged it because globally, there are shortages of key componentry in the products that we manufacture.
You flipped the balance sheet from nearly $80 million in net debt to over $35 million in net cash. You've also got up to $400 million in credit facilities. Are you signalling more bolt-ons, or is there appetite for something transformational?
I think when you look at our M&A strategy, we've been consistent that it will be in communications. We've got a healthy pipeline of activity, and that activity is always small, medium, and large. I wouldn't put anything transformational in that bucket at this stage, but we have a positive, pipeline of work going through that.
Final question, you've guided to FY27 revenue growth of 20%. What's actually in the 20%?
Yeah, so the 20% is only communications. So just want to make that clear. And I think over a period of time, Codan has always been consistent that in comms, we want to grow 10 to 15%. We've guided to the upper range of where we sort of finished this year. And it's all about the ongoing order momentum we're seeing in the unmanned systems space, some positive pickup in our public safety business as well, Zetron. So that's the real crux of that. So what we've seen in Q1, we think will continue. And, organisationally, 10 to 15% has always been the benchmark for us. We think that's a robust factor. But every now and then, like it's happened in the last couple of years, we've been at upper end of the range, closer to 20.
Thanks, Alf, for your time today, and congratulations on a great result. If you enjoyed that interview, make sure to give it a like, and don't forget to check out our YouTube channel for more C-Suite reporting season coverage.